It's Ed Ponsi, your FX educator here on behalf of FX Street, getting ready for another session. Welcome back, everybody who's here for Free Access Day. Do not be shy to ask questions. I'm always happy to try to answer for you if I can. I've got about 70 people in the room, so that ought to keep me busy. Just taking a quick look at the S&P E-minis chart, and you can see that we really kind of it looks like big moves up and down, but it's really not. It's just fairly contained in a fairly small area. So it's fairly quiet here at the open. Dow is just down about 8 points here off the open. If I go to the S&P chart, you can see that, something we talked about a lot lately. First of all, this is a fantastic uptrend in the S&P. It really begins when the expectation for QE2 begins. This is where the rumblings, the rumors begin back here. The market just takes off. And this is the S&P 500 is represented by an ETF called the Spiders, SPY, right? And we had a very sharp pullback, hit the 100-day moving average, and now we've popped very nicely off of that. But if you look at this area up here, look how small the candles are getting. In other words, this move appears to be exhausted. You're into a resistance area up here, right? And look at the little spinning tops and all the various little small bodies, which is telling you that this move appears to be exhausted. Additionally, there's a gap here. There's a gap here from last week that hasn't been filled yet. And we know that very often gaps get filled. Why? Because sometimes orders are resting in there that need to be filled. And therefore, it is advantageous. It is preferable for the brokers and the banks if all the gaps are filled, because that means there are no orders sitting out here unfilled. And, the banks and the brokers, they make money when the orders get filled. That's just a fact of life. They can't control the market. Sometimes gaps don't fill. It doesn't always fill, but I think when you do see a gap, I think there's a high probability that it will fill at some point. So that means this market would have to come down in order to fill that. Why do we look at the S&P 500? We look at a lot of things because they're interrelated, right? The rally in S&P 500 doesn't look terribly different from the rally in Euro, right, on the daily chart. And, they both took off, and they've both had tremendous runs recently. Just watching the pullback here, we talked about 142.50 as an area. Right now we're trading at 142.60, and we got as low as 142.42. So we got maybe 8 pips below that area. Again, it's not something that I would dive into just as he's beginning to speak, but of course Trichet has been going on for an hour now. And the takeaway from Trichet is, of course, and let's go to the 5-minute here. The takeaway from Trichet is that he will not commit to greater rate hikes in the future. He's not committing. He didn't use the word vigilance. One of the questioners tried to lead him, putting vigilance in his question. I believe it was a questioner from CNN. Trichet didn't bite. He said, "We haven't decided." He's not saying one way or the other, but he just said, "We haven't decided that this is the first in a series that has not been decided." So the market's a little bit disappointed. Didn't hear vigilance, didn't hear any commitment to future hikes. But one thing that I did hear from Trichet that I found interesting, and in fact I tweeted it, I found it so interesting, is that Trichet said that keeping inflation, and I'm just going to paraphrase here, if you don't anchor expectations of inflation, you're going to hurt growth. This is huge in my mind because it really sets him up. He's diametrically opposed to Bernanke. Bernanke is creating expectations of higher inflation and trying to use that to create growth. And Trichet is basically saying the exact opposite. Trichet is saying by creating expectation of higher inflation down the road, you hurt growth. It's like threatening the market. It's like threatening business with a tax. You hurt growth when you do that. And that's exactly what I think Bernanke is doing. So really, Trichet, in my opinion, is on the right side of that issue, and Bernanke not so much. Okay. By the way, just to keep you posted on things that are going on out there. Check this out. We just heard that there was an earthquake in Veracruz. Veracruz, Mexico. And, I don't know if this was on land or in the water. But theoretically, obviously 6.7 quake, so that could be pretty significant. But at the same time, it's nowhere near the level of the Japan quake. All right, so don't be caught by surprise. Don't be caught out by surprise if something crazy happens, right? So, for example, right, what if this did happen in the water? What body of water is this? It's the Gulf of Mexico. So however unlikely this scenario is, what if you had a tsunami in the Gulf of Mexico? What would that do to oil prices? And what would that in turn do to currencies that are highly affected by oil prices, for example, like Canadian dollar? It's a little game of connect the dots, right? This just happened. We don't really have all the details yet. But preliminary indication is a 6.7 earthquake in Veracruz, which is on the coast of Mexico. And, obviously, first of all, they said it was bad enough that the buildings were swaying in Mexico City, and that's a couple hundred miles away, MC, right, a couple hundred miles away. I know I used to live there. Long story. But, yeah, I did live in Mexico City for a while. And there it is, City of Mexico. It's about 250 miles. They said the buildings here were swaying. And, those preliminary reports of earthquakes, sometimes they understate, the on the Richter scale. So they're saying 6.7. I don't know if it's on land or in the water. I don't know if there's potential for a tsunami. But it's something that we have to consider, right, on the back of what just happened in Japan. So you always want to keep the mind working, what's going to happen, connect the dots, what would happen, how would that affect things. No damage or deaths in Mexico, says Paula. Well, yeah, okay, but isn't it a little early? We don't really know. It's a little early to say, right? We just got the news report. So far, there's no reports of damage or deaths, but, I would like to have more information. Hey, Harley says, I can't listen to him anymore. Well, I hear you, man. It wears you out after a while. Trichet, he was quite clear today. He said, forget a second round, guys. Okay, Mike, I would interpret it as he won't commit to it. But at the same time, I don't think he ruled it out. And that's part of being a central banker. Sometimes you got to give them a hint, and sometimes you got to keep them guessing. And I think today he kind of kept them guessing. But that's okay, because I never thought that you were going to see consecutive rate hikes anyway or anything like that. Because if you look back at the history of rate hikes from the ECB, they don't tend to do consecutive rate hikes. They hit it, then they back off for a few meetings, then they hit it, then they back off for a few meetings. So there's still plenty of time for him to begin. It's probably too early for him to begin signaling the markets for another rate hike. And Trichet is very good like that. He's going to see how the market reacts to this first. He's going to see how the economy reacts first. Okay. Doesn't the euro rate raise put pressure on the Fed and the BOE. Well, it depends. I mean, I think Bernanke and Mervyn King are out of step, but Bernanke has appeared in the past to me to be quite what's the word I'm looking for? He's very sure of himself. Let's put it that way. Almost to the point of arrogance. He doesn't really in the past he's acted as if there were no chance that he could possibly be wrong. Earlier this week, though, he did give a speech where he said outright, if I'm wrong about inflation, then XXX. Well, okay. At least he's admitting he might be wrong, so maybe he's coming around. Okay? But in the past, I would say, he's been so arrogant and so sure of himself that it leads me to believe that he won't easily be swayed. And, you get all these guys like Plosser and Fisher and Bullard on the Fed saying all the right things, but they don't make the decision. It's not like the Bank of England where, everybody votes and there's a 9-member policy and if 5 of them say raise rates, then you raise it. That's not how it works in the U.S. It's much less democratic in the U.S., ironic. Okay? It's basically Bernanke's call, and the two most powerful people under Bernanke are Yellen and Dudley, and they're both doves, and they're not going to do it. They're not going to raise rates. Paul Volcker says lots of oil platforms. That's what I'm thinking. I mean, listen, it's not like I'm going to place a trade based on this, but you kind of, anytime anything happens, your mind always starts to draw these links. It starts to connect the dots and say, okay, what if, tomorrow they announce that there's an 8.0 earthquake? What are you going to do? Buy Canadian dollar? Maybe. Right? Are you going to sell Mexican peso? Not necessarily, because Mexico is a big oil producer. And as we saw in Japan, having a natural disaster doesn't necessarily mean that your currency is going to weaken. Sometimes it gets stronger. All right. So anyway, just ways to think about things. Let's flip along here. Let's get back to the charts. So this one, we talked about this area earlier, 142.50 as being an area of support. So far, I'd have to say that's been correct. Will that continue to hold? I have no idea, but so far that appears to have been a decent choice of a level of support. What about the British pound? 163 area, maybe a little above 163, appears to be some kind of a resistance point. If you look at it like this, it could actually be a multi-top up here. In other words, look at this. Right? Is this going to be a triple top? You call it whatever you want, but that's only on a 5-minute chart, I realize. But, listen, there's nothing wrong with that. Make it a 15. Maybe we'll be able to see it a little bit better. Right? Possible triple top forming on pound dollar. Looks like the key is 162.65. Right? So again, I'm just game planning. Do I know what's going to happen here? No. This goes back to I got so many questions earlier that were like prediction questions, What's the winning lottery number going to be tonight? I'm not a predictor. I'll react. If this breaks down below 162.65, I have to game plan. Should I short it? I don't know if it's going to break that line, but if it does break that line, what am I going to do? That's the question. All right. It looks to me like you've got resistance up in this area around 163.50. So a breakdown here around 162.60, 162.50, and a stop up here. If you're going to put your stop all the way up top here above this high, that stop's going to be pretty wide. It's going to be a little more than 100 pips. Now, whether or not that's wide depends on you. Okay, but I know this, if my stop's 100 pips away, I'd better be able to make a lot more than 100 pips if I'm right and it does break down. And you can see if we back it up a little bit more, I'll make it a 30-minute. There are other levels of support, but the really, really good support level is 160. Okay, there's a lot more activity down here, and it's come down and it's failed to stay underneath there. So it looks to me like if this breaks here, it's not necessarily a smooth ride down to 160, but it's a possibility. So we sort of game plan that. We say, all right, I'm not necessarily going to short it and then try to get the whole thing down there. Maybe we'll take a partial profit along the way. There are certainly other levels in here. So just a sort of a game plan, right? Like this, for example, this level here appears to have some significance to it. That's around 161.75. Target. Now, I never put my targets all the way down at the obvious point. I'll bump it up. Probably this, in this case, probably around to 160.25. Okay. Entry is about here, around 162.50. Make that green for go. Stop. And listen, again, you just game plan this. Doesn't mean you're going to do it. You lay it out and you see if it makes sense. You got to use your head, right? Does it make sense? If I short it here at 162.50, I put a stop up above this high at say 163.70, I'm risking 120. Does that make sense for me to try to gain 225? 2-to-1 risk reward. I'm not jumping out of my chair. I'm not jumping out of my chair, but this is how you analyze it. Right? Okay, you look at the chart, and you don't go looking for formations. You look at the chart and you see what jumps off the chart at you. In this case, it jumps off the chart. Now there are many ways we could handle this. We don't have to put the stop all the way up here. But if we don't put it up here, the chance of it getting hit is going to be increased. Okay. Okay. This is the location that makes the most sense in terms of resistance. If this thing turns and starts making new highs, and we're short, we don't want to hold it. Okay. The first target is about 150 or so. The stop's about 120. It's close to 1-to-1 for the first target. Now, I would never, ever, ever, ever recommend that you trade with a 1-to-1 risk-reward ratio. It's just not. It just doesn't make sense. But if you're using multiple targets, and one of your targets, maybe your first target, has close to a 1-to-1 risk-reward ratio, to me that's acceptable because it's not the entire trade, it's just a piece of the trade. So if this thing breaks down, you see, I don't need it to come all the way down here to make money. Right? If this thing does break down, if I can just get it down to here, I'm going to make some money. I'm going to ring the register here, and I'll bring the stop down. Now, you could bring it down to the entry point, or you could bring it down to here. Because this is a support level right now, if it breaks, it'll become a resistance level. By putting it a little bit above that resistance level, just game planning here, what am I doing? I've got my stop above resistance, above the next level of resistance now. Pretty cool. All right. It's a little bit of a stream of consciousness, but that's exactly how my mind works when I look at charts. I'm looking for, okay, can I make money on this chart? And I won't necessarily place this trade. I'm going to look through more charts, and I'm going to look for the best trade. I don't need to place it right now. It's not breaking right but I've got in my mind what I want to do if this breaks. Now what I have to figure out is, do I want to trade this one, or can I find something better? Okay, that's the way that I'm thinking of it. Don't be afraid to do a little work and look at a few charts. Everyone's trying to do it the easy way, and that often doesn't work. All right, I've got about 10 minutes left here, so let me pound dollar on bigger time frame. Why do I think it'll turn there and drop 200 pips? Al, I don't think that at all. But if this breaks, I might place that trade if it happens. All right, but let's take a look at the bigger time frames. Is there an uptrend on the bigger time frames? Yes, there is. But what do you see? This is on the daily. But what's been happening on this for the past 2 months or so? In other words, this is an uptrend. Yeah. I even drew the line. I already had the line in. But within that uptrend, what's going on for the past, since the beginning of February? Up, down, up, down, up, down, up. Okay. You see what I'm saying? It's behaving as if it's in a consolidation pattern. That's really what I'm playing here. And of course, maybe, right, maybe the price never gets to the entry point and something changes and it breaks out to the upside. If it does, if it never gets to the entry point, we're not short. Okay, but I don't think it's a stretch to say that this isn't necessarily trending right in this stretch, in this area. It's not necessarily trending. It's really consolidating, in my opinion. And of course, hey, listen, charts are in the eye of the beholder. I'm not saying you're wrong. It's just an interpretation. Cool. Let's check other questions. I'm going to turn the camera off for just a second. So we talked about Gaddafi has apparently started bombing his own oil fields. I think that actually, I think that was it. It sounds like I'm not sure what's going on over there anymore. But I'll tell you, yeah, what a psycho indeed. That guy's out of control. Just goes to show you what you're dealing with over there, and people don't necessarily think the way we do. Is it going to go back down till 16050? I don't know. In a similar trade, 88.6, the larger range. Yeah, that's awesome. Right, Genius FX putting in the Fibonacci levels here. Just flipping through your comments here. Mike says quake was on land, actually right in the middle of Mexico. Okay, good. So no tsunami, no tsunami scenario, and I'm watching the price of oil. The price of oil is not rocketing up the way it would be if there were a tsunami heading through the Gulf of Mexico. But, you just think of those things right away. It's like whenever you hear something, any type of news at all, you're always thinking, okay, how does this process it? How will this affect markets? And if you can interpret things, you don't necessarily, just like the trade we set up on British pound, you're not necessarily going to do it. You're just kind of spitballing, and you're saying, well, is that the best one I can come up with? Maybe I can come up with something better. Okay. 150 pips on 30-minute, is that not too much? Not for me. Again, Al, I tend to be more of a position trader, and I tend to look for the bigger trades. My philosophy is that you have to pay that spread, whether you're trading for 5 pips or 500 pips. So you're probably better off trading for 500 pips because the spread doesn't get smaller when you're trading for 5 pips. Just something to think about. That doesn't mean I'm going to trade for 500 pips all the time. I do some short-term trades if I can see some money there, but the spreads had better be tight. I'm very conscious of the spreads, and I think by making the playing field bigger, I think traders are going to make more money if they make the playing field bigger. That's been my experience, and what I've seen from other traders is that the traders who make the playing field bigger are the ones that tend to make money in Forex. the traders who like to press buttons tend to have less luck. The ones that are very, very active, and just something to think about for everybody out there. By the way, if pound starts making new highs, are we going to think about shorting it? No, right? Of course not. Right? So, listen, you got to think about things. You got to use your head, right? You got to think about things like the spread, the potential for making money. But just because you lay something out doesn't mean you're going to do it. That's the lazy man's way out, right? The person who's willing to work a little harder is going to continue looking for opportunities. I just wanted to create an example of how I look for those opportunities. And what I will do is I will flip through charts and I will wait for things to jump off the chart at me. Okay? Yeah, it would happen pretty fast. Again, is that we were talking about a 120 stop loss. He has a game plan, risk reward, triple top. Again, guys, everyone calm down. Just because we talked about something doesn't mean it's the greatest trade ever. I'm not here giving you trades. I'm showing you how I game plan stuff. I might do the same thing with 20 charts and then pick the best one. Basically how I spend my weekends. Okay. Okay. Newbie traders never focus on stops, which is the first thing you should focus on when placing a trade. That's the only thing you have true control over. Definitely got to think about how much you're risking and not how much you're making, and that's the professional way of looking at things. Genius FX laid it out on the line there. The professional way of looking at things is to think in terms of how much am I risking. Okay, let's get back to the charts. We still have just a few minutes left. I really enjoyed speaking with you guys today. It's always fun when we're talking about central banks and the ECB, and we've got speeches coming out. I'm looking at this chart too. On euro, yen. I would love to get some of this, but I just cannot get it at the highs. We need some kind of a pullback. I'm looking at this, the way the moving averages are fanning out. It's quite beautiful. The euro is just crushing the yen here. Euro is obviously very much in favor. Yen is very much out of favor as an investment right now. And obviously, if you go against, if you start buying yen, you're fighting central banks all around the world. It's just not a good idea. I would love to get some, but you need a pullback. What I normally do in a situation like this is I'll flip to shorter time frames, like a 60-minute, to try to get in on something like this. And so, for example, you could use something like relative strength index. All right, you see that dip? That dip's telling me that dip wasn't deep enough. All right, I need that dip to go underneath this line to create a buy signal. It's not a buy signal when the RSI goes under that line. It's a buy signal when it turns and pops back up. But that dip is a perfect example. It just didn't quite make it. Now, we haven't been getting any buy signals. That's the problem when something is going straight up. You want to buy the dip. This thing won't even dip. It leads me to believe that when it finally does dip, it's going to be significant. Okay, but if you go against this, if you short this, see, look at the difference in this chart versus the difference in British pound that we just looked at. Now, that's what I call an uptrend right there. This was a huge breakout above 115. Just happened fairly recently, the beginning of the month, and it's done nothing but go straight up ever since then. That is something I would never stand in front of. Okay? But something like British pound, where it's going back and forth, back and forth, back and forth, I'd consider shorting. Doesn't mean I'm going to, but I would at least consider shorting it. Whereas euro yen, not a chance in the world would I short this. Okay? I could be wrong, but that's how I trade. I've been trading for a long time, and I'm still here in the game. All right, so speaking of which, it's time for me to go. I've got to get everything in order. Some disclosure documents, etc. So I'm going to have some fun talking with the NFA today and getting everything straightened out. We've been going back and forth on our disclosure documents, etc. So because of all the new Forex rules, of course, right? So just getting all that lined up. So I'm out of here, folks. Everybody have a great day trading, and for all you regulars here on FX Street, I'll be back tomorrow. My name is Ed Ponsi. That's right, my name's Ponsi. What are you going to do about it? All right, everybody have a great day. I really enjoyed speaking with you today. Be careful out there. See you tomorrow.